Hello friends, today is my 37th presentation for the team of finance and accounts, and the topic is 95 causes that can adversely impact the financial reporting of non-current assets in the balance sheet. Overall, this is my 68th presentation considering all the YouTube presentations which I have made so far. What is included in this presentation are: number 1, a tabulation of the 16 types of non-current assets, and number 2, narration of each type of 16 non-current assets, where I will cover the brief definition and the causes, operational and ethical, which can cause adverse implication on the financial reporting one by one. This is a tabulation which gives an overview of the listing of the non-current assets and the operational and ethical causes. For example, in the first row, which is about Capital-WIP, there are 3 operational causes listed and 4 ethical causes listed, which can adversely impact the reporting of non-current assets. Similarly, say line number 5, investment in debentures, 4 operational causes, 2 ethical causes. Line number 9, long-term security deposits given, 3 operational causes, 2 ethical causes. Likewise, line number 13, advance income tax, 4 operational causes and 2 ethical causes, and so on and so forth. Total all adding up to 58 operational causes and 37 ethical causes, which can adversely impact the financial reporting of the non-current assets. Now I will take this one by one. Starting with the Capital-WIP. By Capital-WIP, it means, simply stating, assets under construction and not yet ready for use, recorded as work in progress. The operational causes are 3. Capitalizing repair and maintenance costs as part of the CWIP, which is not correct. Non-timely conduct of impairment assessments of CWIP. Non-transparency in reporting. Ethical causes are intentional overstatement of the CWIP to inflate the value of assets, or understating CWIP, inadequate disclosures, and manipulating the CWIP figures to meet the financial targets. Fixed assets held on lease. These are defined as assets, long-term assets held under lease agreement, not owned by the company but certainly controlled by the company. Operational causes are inaccurately estimating lease obligations, overstating the value of the lease fixed assets, applying improper or aggressive depreciation to the lease assets, and not adhering to the accounting standards and principles. Ethical causes are deliberate misclassification of the lease type in the agreement as finance lease versus operational lease, inadequate disclosures with respect to entering into lease agreements with the related parties or entities owned by the management without proper disclosures. Type 3, investment in the equity subsidiary and associate companies. This definition is self-explanatory. Operational causes are overstating or understating the percentage ownership stakes, inaccurate valuation of the investment either at cost or fair value, improper or incomplete consolidation of the financial statement of subsidiaries, non-timely or inadequate conduct of the impairment assessments on the investments, and not adhering to the accounting standards and principles. Ethical causes are 2. Non-objective valuation method for reporting the investment or impairment assessment methods, inadequate disclosures of investment in the subsidiaries, associate companies and JVs, etc. Type 4, investment in the preferential shares. These include long-term investment in the preferential shares which offer fixed dividends but no voting rights. Operational causes are 4. Overstating or understating the valuation of the preference shares, non-objective method of impairment assessments of investment, not adhering to the accounting standards, and inaccurate recording and reporting of dividend income. Ethical causes: Non-objective method of determining the impairment of investments, inadequate disclosure about the preference shares. Investment in the debentures. Investment in the debentures mean the long-term debt instruments which earn fixed interest. Operational causes: incorrect valuation of the debentures, non-timely impairment assessment of investment in the debentures, not adhering to the accounting standards and principles, applying incorrect effective interest rate method, or delaying in recognizing the interest income. Ethical causes: 2. Non-objective method of determining the impairment of investments, then inadequate disclosure related to the debentures regarding the terms, conditions, valuation methodology, maturity dates, interest rates, and so on and so forth. Type 6, non-current assets, investment in the partnership firms. Operational causes are applying an inaccurate method to determine the value of the investment in the partnership firm, not on equitable basis, inaccurate recognition of the income from investment in the partnership firms based on the investor's share of partnership profits, not adhering to accounting standards and principles, incorrect and non-regular impairment testing methods leading to inaccurate reporting of the recoverable amount vis-a-vis the amount carried in the balance sheet. Ethical causes: 2. Misrepresentation of the investment value. Number 2, lack of transparency in the disclosure related to the various things like names of the partnerships, investor shares of the partnership in assets and liabilities, profits or loss attributed to investors, any restriction of withdrawal of investment, and significant related to party transactions. Investment in other properties. It means real estate properties held on investments for capital appreciation or rental income. Operational causes are lack of objectivity and impartiality in the financial reporting. Financial reporting information is complex, convoluted, or lacking sufficient details, not adhering to accounting standards and principles. Ethical causes: 3. Deliberate manipulation of figures to portray a more favorable financial position. Inadequate disclosure like hiding liabilities, not disclosing related party transactions, misusing funds, or misappropriating assets for personal gains. Type 8, long-term capital advances given. These are the advances given for capital expenditure like acquiring fixed assets. Operational causes: 3. Inaccurate impairment amounts, lack of internal controls such as inadequate segregation of duties, insufficient checks and balances leading to inaccuracy in the reporting, incorrect application of relevant accounting standards. In fact, these 2 points, lack of internal controls, inadequate segregation of duties, insufficient checks and balances, and incorrect application of relevant accounting standards, are the common points applicable to almost all these non-current assets. Ethical causes: inadequate disclosure and transparency regarding the purpose of the advance, repayment terms, interest rates, maturity schedule, etc. etc. And in fact, this ethical cause, is also common to almost all the non-current asset reporting. And number 2 is deliberate incorrect assets categorization vis-a-vis capital advances, investment, fixed or current assets. Long-term security deposit given. These are the deposits given or available with suppliers, landlord, or others held for extended periods. The operational causes are: 3. Inaccurate assessment and reporting of the impairment amount, lack of internal controls, not following relevant accounting standards. Ethical causes are intentional misrepresentation by overstating the value of securities and inadequate disclosures. Long-term advances to related parties. Definition is itself simple. Operational causes are overstating their value of advances, inaccurate reflection of the impairment vis-a-vis related parties, their inability to pay, and or allowance for doubtful accounts. Ethical causes: inadequate disclosure about the purpose of the long-term advances to the related parties, deliberate inaccuracy in reporting the long-term advances to related parties, and concealment of the liabilities. Long-term loans to the employees. These type of loans are given to employees usually for housing education, or other needs like wedding for the children. Operational causes: lack of proper documentation of terms and conditions of loans given to employees, leading to discrepancies in reporting, biased or inaccurate reporting, lack of internal controls, not reflecting impairment due to employees leaving, retiring, etc. Ethical causes: deliberate efforts to manipulate the loan transactions, inadequate disclosures about the purpose of the long term loans given to employees, expenses prepaid like insurance and insurance policies as such, which is listed here as annual maintenance contracts. Now, this includes payment made in advance for insurance policies covering the future periods. Operational causes: overstatement of the prepaid amount or sum insured, not expensing the portion of the prepaid amount in the income statement to reflect the consumption of the insurance coverage, incorrect amortization of the prepaid insurance expense over the policy period, non-timely or incorrect reporting of the sum insured. Ethical causes: inadequate disclosure of the terms and conditions of the prepaid insurance premium, inadequate disclosure of the terms and conditions of the policy amount, terms, insurance company risk covered, insured duration, etc., and paying higher prepaid advance in return of personal favors. Advance income tax: these are the tax payments made in advance, adjustable against future tax liabilities. Operational causes: inaccurate calculation of the tax liability and hence advance tax payment, improper recognition of the income, not accounting for tax refunds, not following various sections of the Income Tax Act. Ethical causes are concealment of the liabilities and incomplete disclosures. Balance with the government authorities: these are the amounts lying with government bodies like income tax, GST, customs, port authorities, etc., or local regulatory bodies. Operational causes: inaccurate calculation of the deposits amount, not proper accounting of the interest earned, improper allocation of the deposit due to lack of internal controls, incorrect segregation of duties or segregation of deposits among income tax, GST, customs, or ports, etc. Ethical causes: intentional error in capturing the basis of calculation of the deposits, incomplete disclosures and explanatory notes related to the balances with the government authorities. Long-term receivables-fixed assets: this includes receivable assets from the sale or transfer of the fixed assets due to due in the long term. Operational causes are incorrect reporting of the values of long-term receivables with respect to the fixed assets, valuation errors causing inaccurate reporting, not providing allowances towards doubtful accounts and impairment loss. Ethical causes are incomplete disclosures and inaccurate valuation of the receivables from related parties. Lastly, insurance claims. Claims filed for insurance compensation pending receipt over an extended period. Operational causes are inaccurate financial statement about the sum insured and computation of the damages, understating or overstating the claims filed, erroneous determination of the claim amount, not following accounting standards for reporting insurance claims. Ethical causes: making false or exaggerated claims and lack of transparency in the disclosing the details. So, overall, I have covered 95 causes, which include 58 operational causes and 37 ethical related causes. Now, so far, my two books have been released, and the last one was in November 23 on profitability and ethics. This blog is primarily focusing on the 16 different types of non-current assets. My forthcoming third book will be primarily on the ethics in operational finance, but it will cover smart balance sheet strategies as well. You can please refer to your articles of interest in my website, in my Facebook, and my LinkedIn. Thank you very much.